We've got our next question on Cochin Shipyard. Ankit from Ahmedabad is writing and wants to know if we can go ahead and buy Cochin Shipyard right now. Nirav, I'll come to you on this one. Your view with regards to where Cochin Shipyard stands?
Well, yes, definitely he can buy, but he has to buy with a medium to long-term horizon.
All right, so that's with regards to where Cochin Shipyard stands. We've got our next question from Mahi. So it's a broad-based question. What she's saying is that almost all experts are saying that a portfolio should have around 15 to 20 stocks, and that's the right strategy. And what she's saying is she holds about 60 to 70 different stocks of various sectors in her portfolio and wants to know as to how should she now reconstruct her portfolio. It's a broad-based question, Nirav, but in your opinion, I think how I would like to put this forward is whether she has to adopt a strategy to maybe reduce the counters. What should that strategy be? And secondly, if you were to build a portfolio right now, considering 4 to 5 stocks, what would your picks be like?
Well, first of all, I think when you have 60 to 70 stocks in your portfolio, then I can imagine what kind of confusion and chaos must be happening. Because you have to monitor all those stocks, you have to see the performance of those stocks, and that is not an easy task at an individual level. I think the best course of action will be to take help of some expert and prune down the portfolio, get a portfolio review done. Ideally, what we tend to do is do a portfolio review, see the weightage of these stocks, all the stocks to the total value, and then do an individual check on the investments. The ideal course of action will be that those stocks which have a lower weightage and lower prospects should be sold off, and you tend to add to the list of the core 15 to 20 stocks which are already there in the portfolio, and that's how basically the primary rejig of the portfolio is done.
Okay, all right. So that's with regards to where where Nirav's picks are concerned, and of course his view on how to construct portfolio.
By the way, he's calling you Mahi. His name is Satya, and he's calling you Mahi. Yeah. I like the short form.
Yeah, a lot of people call me that though. All right, we've got our first caller for the day. Amit is calling us from Dubai. Amit, hi, a very good morning to you. How can we help you today?
Good morning. What a good day! What a good day to call you guys. Yeah, congratulations for this massive enabler rise. Guys, absolutely. Very simple query, right?
Yes.
My portfolio is made up of consumption stocks, right? Obviously. So it's very obvious for me to ask, what the hell should I do now? So I have Dabur, yes, which I've been holding for a long time.
Yes.
Been buying for the last 2 years.
Correct.
Hasn't performed anything. It even went down to $450 or something, but I have 250 shares at $500. I've been holding for some time. I'm a long-term investor, so I don't trade. I invest for long-term. If I were to hold Dabur, where do you see Dabur earnings over the next 4 to 6 quarters for me to keep holding on?
Understood. I got your point, Amit. I'll take this up with Nirav then. Nirav, your view on the entire consumption space from a macro perspective because of this GST 2.0 boost, and with regards to where Dabur stands, because for Dabur also there is a lot of products that will benefit from this GST rate cut, and that will probably boost their volumes as well as demand. So your view with regards to the broader consumption space and Dabur?
Broadly, the consumption space could never have had it so good. So I think one is the rural economy is bouncing back. Purchasing power is coming back. We have the GST rationalization, so more money in the hands of the consumers, more spending power. So hopefully we should see the volumes making a comeback. The volumes were a sore point as far as the FMCG companies, the consumption companies were concerned. We also have raw material prices being quite benign at this point of time. That should help boost the margins. So the advice is definitely to hold these stocks. And today particularly, we've seen the rural-facing FMCG stocks do quite well in trade. To just give you a few examples, Dabur has been doing quite well. Imami has been doing quite well. And I think this should be the trend going forward. So I think the advice is definitely to hold with a medium to long-term horizon.